Everybody knows about Apollo Hospital, but there are many healthcare hospital stocks with high potential. Today, we are going to discuss the top 7 hospital healthcare stocks to invest for the long term. The healthcare sector is one of the fastest growing sectors in India. The COVID-19 pandemic has triggered a massive transformation in the healthcare space. The pandemic has made it clear that prioritizing healthcare is necessary. If you are new to my channel, please do subscribe. Also, check out my playlist, Best Stocks to Buy for the Long Term. I will give you 5 reasons on why you should invest in healthcare stocks. The healthcare sector in India has demonstrated robust growth, with a compound annual growth rate of 16.3% from 2015 to 2020. This growth trend is expected to continue, given the increasing demand for healthcare services, surpassing the existing supply. The healthcare sector in India remains underdeveloped and underpenetrated compared to global standards. With only 3.6% of GDP spent on healthcare and a shortage of healthcare professionals, there is a substantial opportunity for expansion and improvement in healthcare access and quality. India's large and growing population, particularly the segments above 50 and 65 years of age, suggests an increasing need for healthcare services, especially for chronic and geriatric care. Government's initiatives such as Ayushman Bharat, National Health Mission, and National Digital Health Mission, along with improved affordability through increased health insurance penetration, have contributed to higher awareness and accessibility of healthcare services. The rapid adoption of digital technologies in the healthcare sector, including telemedicine, e-pharmacy, online consultations, and health apps, presents significant opportunities. The digital health market in India is expected to grow at a remarkable compound annual growth rate of 68% from 2020 to 2025, reaching a substantial market size. So let's get started. The first stock has been at the forefront of providing economical healthcare services since its inception in 2000. They have over 47 healthcare facilities across multiple locations. I am talking about Narayana Hridyalaya. The company was founded by its promoter Devi Prasad Shetty, who has over 30 years of medical experience. The company is headquartered in Bangalore. Initially focused on cardiac and renal sciences, Narayana Health has expanded its expertise to include cancer care, neurology, neurosurgery, orthopedics, and gastroenterology. Narayana Health employs around 17,000 full-time employees and associates, including a remarkable 3,550 doctors. This dedicated team plays a pivotal role in delivering high-quality healthcare services. Narayana Health's revenue breakdown is fascinating. The inpatient segment accounted for approximately 73% of revenues, followed by outpatient services at 21%, medical consumables and drugs at 5%, and other services at 1%. Geographically, the company's business is concentrated primarily in Bangalore and Kolkata, contributing about 60% of total revenue. Narayana Health has expanded its reach globally with the establishment of Health City Cayman Islands in North America. They are also planning to set up additional multi-specialty centers and a radiation oncology department with an estimated cost of around $93 million. From being recognized as the best single specialty hospital in cardiology to receiving awards for exceptional CSR work, their commitment to excellence is evident. The company has announced its plan to enter into the health insurance space and expects to get IRDAI license by next year. Narayana Health, with a market capitalization of 23,576 crore, operates with a current stock price of 1,180. Price-to-earning ratio is 32.10, lower than its sector pay ratio of 62.42. Stock price rose 54.52% and outperformed its sector by 24.95% in the past year. Debt-to-equity ratio of 0.36 is less than 1 and healthy. Return on equity for the last financial year was 29.48%. The company is generating increasing cash from operations. The company is giving better long-term returns than the industry. It is a good time to consider buying the stock as it is not in the overbought zone. 80% by rating from analysts. The second stock is one of the largest corporate healthcare group in India. This company has introduced rapid AI technology to treat stroke patients. I am talking about Krishna Institute of Medical Sciences. It has received accreditations from both national and international agencies. The company operates 9 multi-specialty hospitals under the KIMS Hospitals brand. KIMS stands as a regional healthcare powerhouse, boosting leadership in both Andhra Pradesh and Telangana. Offering over 25 specialties and super specialties, including cardiac sciences, oncology, neurosciences, and more, KIMS ensures a comprehensive range of healthcare services for its patients. Let's talk numbers. Cardiac care takes the lead, contributing 17% to the revenue mix, followed by neurosciences at 11% and renal sciences at 9%. With 67% of the fiscal year 22 revenue coming from the Telangana cluster, KIMS has strategically positioned itself for success. KIMS has lined up expansion in Maharashtra and Karnataka as part of its plans to double the number of beds to 8,000 over the next 2 to 3 years. KIMS, with a market capitalization of 15,799 crore, operates with a current stock price of 1,948. Price to earning ratio is 46.18, lower than its sector pay ratio of 62.42. Stock price rose 31.38% and outperformed its sector by 1.58% in the past year. Debt to equity ratio of 0.32 is less than 1 and healthy. Return on equity for the last financial year was 20.14%. The company is generating increasing cash from operations. Company's sales growth is better than the industry median. It is a good time to consider buying the stock as it is not in the overbought zone. 100% buy rating from analysts. The third stock is a leading integrated healthcare service. Jhunjhunwala holds a 4% stake in this company. I am talking about Fortis Healthcare. The company operates in 3 primary healthcare verticals: hospitals, diagnostics, and daycare specialty facilities. They are operating in India, Nepal, Dubai, and Sri Lanka with 36 healthcare facilities and approximately 4,000 operational beds. And did you know they control their diagnostics business through a 57% owned subsidiary, SRL Limited, which is one of the largest private diagnostics chains in India. Fortis Healthcare runs 27 hospitals across various states in India, including Haryana, Punjab, Delhi NCR, Karnataka, Rajasthan, Maharashtra, Chennai, and West Bengal. Plus, they have expanded their footprint internationally. The revenue mix reveals that 41% comes from non-surgical revenue, while 59% is from surgical revenue. They are expanding their operational bed capacity, aiming for over 5,000 beds in the next 2 to 3 years. In fiscal year 2023, they signed agreements for the acquisition of Media Hospital in Manesar, Gurugram, further strengthening their presence. Fortis reduced its total debt to Rs 926 crore in fiscal year 2023. From being recognized as the Hospital of the Year to winning awards for patient safety and excellence, Fortis has truly made a mark in the industry. Fortis Healthcare, with a market capitalization of 29,923 crores, operates with a current stock price of 436. Price to earning ratio is 54.67, lower than its sector pay ratio of 62.42. Stock price rose 39.54% and outperformed its sector by 8.99% in the past year. Debt to equity ratio of 0.14 is less than 1 and healthy. Return on equity for the last financial year was 8%. The company is generating increasing cash from operations. It is a good time to consider buying the stock as it is not in the overbought zone. 100% buy rating from analysts. The fourth stock is one of the largest private multi-specialty care providers in India. The company operates under the brand name Medanta and boasts 5 operational hospitals in Gurugram, Indore, Ranchi, Lucknow, and Patna. I am talking about Global Health Limited. They provide healthcare services in over 30 medical specialties and have a team of over 1,300 doctors. Beyond the hospitals, Medanta operates 6 multi-specialty clinics strategically located across key areas, ensuring accessibility to quality healthcare. In fiscal year 2023, the majority of revenue came from inpatient services, 83%, with various specialties contributing differently. The Heart Institute, Institute of Neuroscience, and Cancer Institute were among the top revenue generators. One unique aspect of Medanta's approach is their doctor-led model of management. With a team of over 6,000 medical professionals, including 1,300 plus doctors, they ensure that day-to-day operational governance is overseen by a committee comprising heads of major clinical specialties, the medical director, CEO, and CMD. Medanta isn't just confined to hospital services. They have brought outpatient department pharmacies in-house and launched home care services in Gurugram and New Delhi. The emphasis on telemedicine has significantly increased, providing consultations through video and telephone, showcasing their commitment to accessible healthcare. Medanta's Gurugram Hospital has been ranked as the best private hospital in India for 3 consecutive years and is a consistent feature in global rankings. Global Health, with a market capitalization of 25,540 crores, operates with a current stock price of 944 rupees. Price to earning ratio is 62.96, lower than its sector pay ratio of 65.34. Stock price rose 108.98% and outperformed its sector by 74.97% in the past year. Debt to equity ratio of 0.35 is less than 1 and healthy. Return on equity for the last financial year was 13.42%. The company is generating increasing cash from operations. The company is giving better long-term returns than the industry, 80% by rating from analysts. The fifth stock is India's largest pediatric hospital chain. With 16 hospitals in 6 cities, this stock has become the go-to destination for children-centric and women care services. I am talking about Rainbow Children's Medicare Limited. RCML boasts an impressive infrastructure with 16 hospitals and 3 clinics, totaling over 1650 beds and a dedicated team of 730+ doctors. Notably, many of these doctors have received training and qualifications from renowned institutions in the United Kingdom, United States, Canada, and Australia. What sets RCML apart is its commitment to creating a congenial environment for children. The company allocates a significant portion of its capital expenditure towards the interiors of their hospitals. They offer a range of pediatric services, including secondary care, tertiary intensive care, and multi-specialty and quaternary care. With 1/3 of beds allocated to critical care, it's no surprise that 10 hospitals are accredited by the National Accreditation Board for Hospitals. RCML has a strong geographical presence in key cities like Chennai, Vizag, Bangalore, Hyderabad, Vijayawada, and Delhi. This widespread reach ensures that high-quality pediatric and women care services are accessible to a diverse population. Looking at the revenue breakdown, hospital service contributed 88%, followed by pharmacy sales at 9.2% and medical service fee at 2.8%. RCML also provides fertility care services. Rainbow Children's Medicare, with a market capitalization of 12,224 crores, operates with a current stock price of 1,200 rupees. Price to earning ratio is 56.63, lower than its sector pay ratio of 65.34. Stock price rose 54.25% and outperformed its sector by 20.24% in the past year. Debt to equity ratio is 0 as the company is debt-free. Return on equity for the last financial year was 20%. The company is generating increasing cash from operations. The company is giving better long-term returns than the industry, 67% by rating from analysts. The sixth stock is one of India's prominent healthcare providers. With 17 facilities and approximately 3,400 beds, this stock is the second largest hospital chain in India. Their state-of-the-art infrastructure includes advanced technologies such as robotics, Radixact tomotherapy system, and PET-CT. I am talking about Max Healthcare Institute. Max Healthcare is actively involved in research, with strategic partnerships with Deakin University, Australia, and Imperial College London, UK. Max Healthcare has 6 subsidiaries and recently acquired a 26% equity stake in Acova Healthcare. Max Healthcare specializes in secondary and tertiary care, with a focus on oncology, neurosciences, cardiac sciences, orthopedics, renal sciences, liver and biliary sciences, and minimal access metabolic and bariatric surgery. In recent news, Max Healthcare to buy Starlet Medical Center for 940 crore rupees. Max Healthcare Institute, with a market capitalization of 65,861 crore rupees, operates with a current stock price of 690 rupees. Price to earning ratio is 66.51, higher than its sector pay ratio of 65.58. Stock price rose 54.72% and outperformed its sector by 20.71% in the past year. Debt to equity ratio of 0.08 is less than 1 and healthy. Return on equity for the last financial year was 12%. The company is generating increasing cash from operations. The company is giving better long-term returns than the industry, 57% by rating from analysts. The seventh stock is an Indian powerhouse in the manufacturing and export of medical devices. As a manufacturer and exporter of plastic medical disposables and surgical devices, this company has established itself as a key player in the market. I am talking about Poly Medicure Limited. Poly Medicure boasts a range of over 130 SKUs of disposable medical devices across 9 different product verticals. From infusion therapy to surgery and wound drainage, they have got it all covered. The company's revenue is diversified across segments, with consumables leading at 51%, followed by equipment at 40%, implants at 5%, and reagents at 4%. And when it comes to categories, infusion therapy takes the lead at a whopping 70%, showcasing their dominance in this crucial medical field. Poly Medicure has a robust distribution network, spanning across India with over 260 distributors. They reach more than 5,000 private and government hospitals and nursing homes, ensuring that their products are readily available where needed. The company is a global player, exporting its products to over 110 countries. They have approximately 70% of its revenue coming from exports. Poly Medicure owns and operates 8 state-of-the-art manufacturing facilities worldwide. The company holds over 300 patents, with more than 190 pending applications. Poly Medicure, with a market capitalization of 13,808 crores, operates with a current stock price of 1,445 rupees. Price to earning ratio is 59.35, lower than its sector pay ratio of 65.58. Stock price rose 59.41% and outperformed its sector by 3.47% in the past year. Debt to equity ratio of 0.12 is less than 1 and healthy. Return on equity for the last financial year was 17%. The company is generating increasing cash from operations. The company is giving better long-term returns than the industry, 60% by rating from analysts. Remember, always conduct thorough research before making investment decisions. I hope you found this video informative and subscribe to our channel for more informative videos.